This is a decisive phase for you as an Ecomi and Veve investor because there is a strategic positioning and a strategic decision to make. Hey everyone, it's the Patient Toddler coming at you with another video, and in this one we are going to talk about the macro outlook for Ecomi and Veve. We are going to assess the current situation and we are going to talk about why it is necessary to position yourself strategically in this current market. But before we start, please keep in mind that I'm a crypto and NFT investor and not your financial advisor. So please do your own research before you ape into the Veve collectibles or the Ecomi token. Also, if you enjoy this type of content, please consider dropping a like, subscribe to my channel, and let me know what you think about the macro situation and the Ecomi price development in the comments below. These are all free ways of supporting my channel, and if you are seeking for a non-free way, there's super thanks, channel membership, and becoming a Patreon, a rare hodler to my channel. And at this point, I want to thank each and every one of my rare hodlers that are still holding the line for supporting constantly my journey here. And with that out of the way, let's get started. So as you can see, I am hiding out in the cornfield, and I'm happy that it is here because it is super windy despite the sun, but I can find some shelter so that you guys do not have to suffer the wind noises. But let's get to the topic here. So as always, this is a highly debatable position, and that's why I say that I'm not a financial advisor and so on, because I want you to just listen to it, to just grasp what I am saying and thinking about the market, and then include this to your overall analysis. Because I have already received feedback that I would have a brain freeze, that I'm still in a downside mode while everything is going up again, that the bottom is in, that we are clearly out of the drop zone, that the bear market is technically over, or at least on an upper scale. And I have at least some factors that speak for a different scenario here, some new factors, and we are also going to listen to CZ from Binance for that purpose. But let's start out with the overall situation, because when I look out there in social media, also on YouTube, and the different content creators, I find both the ones that are still bearish and have a downside view, and the ones that are already bullish and think the whole crash situation, Lehman situation in the crypto market is over. And both sides claim that the other side is in the majority. So the ones that are bearish are saying everyone is bullish and therefore we are not yet at the bottom. And the bullish ones are saying everyone is bearish now, and that's a good indicator for us having reached the bottom. And that is funny to me because there is no clear position while looking at basically the same data or the same situation. And what is that? So we have seen that the GDP numbers in the US came out, and it was the second quarter, as expected. Negative GDP in the traditional definition means that we are, with the US, in a recession.
We're not going to be in a recession.
Well, thank you, Joe. But the White House claimed that there is more to it, to the definition of a recession, than only this. And I think we should at least look at the broader definition. This is the definition of the National Bureau of Economic Research, NBER. A recession is a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. A recession begins just after the economy reaches a peak of activity and ends as an economy reaches its trough. Between trough and peak, the economy is in an expansion. Expansion is the normal state of the economy. Most recessions are brief, and they have been rare in recent decades. So what we can see in that specific definition is that we have a declining GDP, which is fulfilled, but it also says that you need declining employment rates. Amid a larger market downturn this spring, tech stocks have suffered the worst rout and massive waves of layoffs. As of July, over 30,000 US tech workers have been laid off, according to an analysis by Crunchbase, including at Facebook parent Meta, car-sharing company Uber, and even at cryptocurrency exchange giants. The fast pace of layoffs in the tech world is a tough pill to swallow for some, as the industry is coming off years of rapid expansion and rampant hiring. Right now, we are still in an employees market where the employee can choose and set conditions, and that employers are still looking for qualified workforce in that market. I think what contributes to the situation, especially in the US, but also in some other European countries, is that there are still stimuli checks being given out in the US, so that people are still receiving helicopter money, helicopter fiat that they can spend. So the overall household situation for the individual households is not as bad as it would be if the stimulus would go away. The same accounts for Europe. So now, for example, Germany has reported a reduction in the inflation, a slight one, compared to the month of the previous year. And that can also have two factors, for example, depending on how you look at it. So first of all, there are government measurements to reduce the overall costs of certain things, like, for example, energy consumptions and also transportation. For example, in Germany, you are getting a subsidized ticket at the moment in the last 3 months for public transport and overall trains in whole Germany for only 9 euros. Otherwise, people would pay over 100 euros per month to do the transportation. And the other side is there's also a subsidy program to keep the gas price a little bit lower for cars. So obviously, inflation gets a little bit reduced if you reduce these overall prices. So here is another point. The current inflation rate is put into perspective with the situation of the ongoing war between Russia and Ukraine, with parts of the cracked supply chain still, because of the health situation and so on. But what is almost always left out is the extensive money printing that we have seen over the last years. And quite frankly, this money printing has been going on for several years already, and the effects we are only seeing right now. So the first date to look out to really assess the current situation, in my opinion, are the CPI numbers in the US for the month of July that are coming out at 10th of August, and also for August that are coming out in the beginning of September. So if these are still increasing, then I expect more downside in the stock market and also in the crypto market. Now here is another funny situation, because we are moving right now, for example, for Bitcoin in this broader bear flag situation, in my opinion at least. And we have seen some smaller pumps out of Bitcoin because the markets are a little bit positively surprised that their expectations of the rate hike, of the inflation level, and of the measurements that the government is taking were actually met. So what we can see most of the time is when the expectation of the market is met, that the market reacts in a positive way. The funny thing is that 1 month before that, a 75 basis point rate hike was an absolute disaster and caused a crash. But now repeating that again, the 75 basis points actually resulted in a little pump. Maybe 100 basis point rate hike was already priced in by some of the people. But in my opinion, it's very important to keep a close attention to how the market reacts to these measurements to fight and combat inflation. So in my opinion, what we are seeing right now is a counter reaction to the hard drop that we had over the last months. So what is normal in a bear market are bear market rallies. Let me read for you the definition of a bear market rally from Investopedia. What is a bear market rally? Bear market rally refers to a sharp, short-term rebound in share prices amid a long-term bear market decline. Bear market rallies are treacherous for investors who mistakenly come to believe they mark the end of an extended downturn. As the primary bearish trend reasserts itself, the disappointment of those who bought during a bear market rally helps to drive prices to new lows. Bear market rallies are also known as dead cat bounces or a sucker's rally. So in my opinion, it is worth repeating these parts here. Investors who mistakenly come to believe they mark the end of an extended downturn. And when they are investing in this bear market rally, the disappointment of those who bought during a bear market rally helps to drive prices to new lows. So they buy high, see another crash coming and sell low. If we are looking at the Bitcoin price at the moment, for example, in the weekly chart, or at the Omi price in the weekly chart, is it too far-fetched to believe that this upswing that we see right now could be the second reaction rally, dead cat bounce, bull trap, bear market rally that we are seeing at the moment? Is it at least a possibility? Let me know in the comments below. As you all know, because I've repeated that in several videos, is that during this bear market, we only had one real bear market rally before this extreme drop in the last months. And it is not normal for a bear market to only have one reaction rally in the bear market. I expect the market to go up again in another reaction rally before dropping again. I don't know how far, I don't know if this is it already, and I would also not count 100% on it, but I think it would be reasonable to have the market have a little bear market rally before plunging again if we are not at the bottom. And at this point I want to repeat it again, because there were many people claiming this. You have to be either right or wrong. No, I just want to say that in my opinion it's more likely to find another lower low on Bitcoin at least, where I want to allocate my money, but I do not have a crystal ball, and yes, it could be that the bottom is in and somehow things turn out to be different. Okay, but let's look here at the situation. In the previous bear market, we had 4 reaction rallies. We had one bottom and people thought that's it, the bottom is in. Reaction, positive, momentum again, and then a drop to a new low. And then another reaction rally, because this time, this is it, people got bullish again. So it is normal that in the bear market rallies, people are getting into this bullish momentum again, and that they are going against the bears and claiming that they would be wrong. So just keep it in mind that in the last bear market we had these 4 reaction rallies that I'm pointing out here for you in the screenshot, and that after that we had some very flat sideways movement and then dropped another 52% into the real bear market bottom. I don't know, I will not say that this has to happen. I just want to make a comparison here that at least in the past this has happened in that way. So right now I think from a sentiment perspective people are very optimistic. I do not see a lot of panic, I do not see desperation, I do not see people giving up, I do not see a real sentiment of capitulation and saying that is it for crypto. And I don't know if this will happen ever, because crypto is right now already established, but at least I think the level of desperation is not in accordance with what the typical Wall Street cheat sheet cycle tells us how sentiment develops during a cycle. With that said, let's also listen to CZ from Binance, because he is claiming that a washout was necessary because there was too much Wall Street and investor capital in this market.
Reset after the Terra collapse, after the Three Arrows Capital collapse, the general crypto winter discussion. It seems like for a while, crypto had attracted even some of the non-believers thinking, hey, maybe we got to be in this space. But is that gone? Do we need a credibility reset to grow that crypto market bigger than 1 trillion, as you brought up earlier?
Yeah, so I think a little bit of a reset is healthy, to be very frank. As you said, crypto attracted was quite a number of unbelievers or non-believers into the space. They're just speculators most likely, and that shouldn't really happen at a large scale. When that happens at a large scale, that means the market's overhot. And after a while, of course, there will be a correction. And usually markets overswing on both ways. And so crypto market should only attract the believers, or should only attract the people who are in it for the technology, who understands how to use it, etc. So I think there's a correction is actually healthier. But I think even given the Luna Terra crash, it does hurt a lot of people, but then you also weed out a lot of the weak players in the industry. I actually think now the industry is much healthier than it was 6 months, 9 months ago when Bitcoin was $68,000. So now actually we see people who are building real applications are staying in the industry. The investors in the industry now are long-term, have a long-term view. So I actually think the industry is actually much healthier now than when it was at all-time high.
So with this, I want to come to Ecomi because it's obviously important that we verify if we are still believing in Ecomi, if we are still believing in the project, if we want to continue to DCA into the project. It is not enough that a YouTuber tells you that there is a 100x or 200x or 1000x upside potential for the Ecomi token. But I think what is very assuring is the second video of CZ that I want to show you, and that is a video about what CZ thinks has sparked the last bull run and where he could see the potential of the next bull run.
So what do you think is the catalyst then for the next big move in price, up or down? Is it about regulatory granularity or more institutional interest or return of the retail investor?
So that part, I don't think anyone can forecast very accurately. Like, nobody really forecasted NFTs, DeFi, etc., which probably drove the last bull run. Before that, in the 2017, was mainly ICOs. 6 months before those things happened, very few people can forecast it. So for the next one, now the market is so much bigger. There's so many more applications in the space. I'm not sure which one, but I think all of those things are moving in the positive direction.
So as we have heard, the last bull run was basically under the topic of DeFi. We all remember that the first rallies and the projects that did really well were DeFi projects and decentralized exchange projects. And then afterwards, the second run up was mainly under the topic of NFT projects. Also, the value increase of several layer ones was because they launched NFT places and NFTs on their layer one chains. So that is very interesting to me because I can already see what could be the topic of the next bull run here in accordance with what CZ said. And in my opinion, this will be the real application of NFTs, the usability in the real life of NFTs, metaverse as something that is really visible and gets more attention in the public, because most people until now cannot really fathom what a metaverse is and how we could live and operate with it. And often we lose sight on how the real population feels about it. So in my opinion, a very important piece of your decision how to position yourself in this market with regards to investing into Ecomi is whether you also see that the topic of the next bull run can be real life application of those licensed NFTs that we see on Veve, and also the usability of the Ecomi token as an underpinning token of one of the most successful NFTs and metaverse plays. And then you need to make a decision on how you want to deal with the possibility that there is more downside to it, or if you are believing that the bottom is already in, you need to make a decision whether you want to commit and how much of your resources you want to commit already for the Ecomi token, for investing into the Ecomi token, if you believe that the Ecomi token has this massive upside potential with the next bull market. And also keep in mind that the Ecomi token, besides the possibility of having this massive upside because of the project type and the technology perspective, also is not listed on exchanges yet. And in each and every bull market, exchange listings will be a major factor of increasing the pump and the parabolic moves out of a token like this. So with all that said, let me know in the comments below what you think about this macro perspective, and also give me some feedback if you want me to talk more about this macro perspective in my videos, how I see the current outlook for the Ecomi token, and if you enjoy these little comments from different important people in the crypto space like CZ in this video. So let me know what you think about all of this in the comments below. And other than that, wherever you are on the world, have yourselves a great morning, evening, day, night or afternoon, and see you in the next video.